Hello friends, how are you doing? In this video we take a quick look at my portfolio and see how it is doing, and I will present to you valuations of every stock in my portfolio. As you already know, everything presented in this video are only my own opinions. I am not a certified financial advisor, so I don't give out financial advice. Everything I say are my own opinions and nothing more than that. I will present to you valuations with expected returns of 10% per year. So if I say in this video that this stock is undervalued by 50% in my opinion, I mean it is undervalued to its fair value with expected returns of 10% every year. Now we only take a look at stocks in my portfolio. The ETFs we will not take a look at. ETFs are currently 19% out of my portfolio. And all data that I have gathered for this video was from last week. Probably nothing has changed, or as far as I know, nothing has changed dramatically in my portfolio. So this is how my portfolio looks right now. And here I can just quickly show you how my portfolio looks. So if you need to take a closer look at it, please pause the video here and you can have a closer look at it. But let's begin with the valuations now. Let's go. First up, flow traders, 22% of my portfolio. That is the biggest holding in my portfolio at the moment. It's currently down -3%. My valuation says that it is undervalued by 30% at the moment. I give out a risk profile from 1 to 10 for each of these stocks, how I see how risky they are, and for flow traders I give a 6. It's not the simplest of industries to understand, financial industry, at least for me. So that's why it's a bit risky for me. Then I'm gonna tell you with every stock I'm gonna present here, I'm gonna tell you also the main risks and main catalysts for the stock. So flow traders' main risks would include changes in financial regulations, which would have direct impact on their business and probably even change drastically the valuation, of course, if something changes in the regulation in the industry they operate. That's a given. But the firm has also catalysts, which I obviously see continuing volatility and large number of orders placed in the market. This stock for me is a hedge against super volatile times in my portfolio. So if there is turmoil like there was in the beginning of Corona crisis, like there was in the beginning of Russia's unlawful war against Ukraine, there is volatility in the market, and if flow traders works like I hope and think it does work, they should make good money in volatile times. The stock has not reacted really to the Russia's unlawful war in Ukraine, but I think it remains to be seen what kind of results the company made during this time when we see next earnings coming up from the company. So let's wait for that and see how flow traders is doing then next time. Next up we have everybody's favorite, Alibaba. That's 18% of my portfolio at the moment. Currently my position is down -23%. Yep, it has been a rough year for Alibaba, as everybody watching this video probably knows. My valuation to Alibaba is that it is currently undervalued by 35%. Risk profile I give 8 out of 10. It has been a risky stock. Many of you surely know many reasons why it is a risky stock, but let me list a few here. Risks related to Alibaba that might cause its stock to go down. Slowing growth due to increasing competition. There are competitors internationally and both in China for Alibaba. The VIE structure, and basically that the government could nationalize your stocks via the VIE structure if they wanted to. Well, this is possible, but I don't see it likely, but still it is a risk. It would be better if you could own Alibaba shares directly, but it is how it is. It is how it is. And then continuing the risks, there are lots of these. Delisting from New York Stock Exchange would crash the stock, at least temporarily. That would cause the stock to go down for sure, but then again, if you can buy it from Hong Kong, that might be a price to actually buy it with a discount. So let's list it as a risk here, but I almost would like to say that being also an opportunity in a way. Another risk would be too tight regulation for Chinese tech companies by Chinese government, which we have seen during the year. They have been cracking down on tech companies, but they have been also saying that the crackdown is coming to an end. And that was actually one of the reasons why the stock bounced up recently. Still, well, yeah, it can be a risk. Then we have probably the worst, or the kind of risk nobody wants to see, which would be China causing a conflict somewhere or taking actively part on Russia's side in its unlawful war against Ukraine. This is a political risk that is pretty hot topic at the moment. China's stance on Ukraine is, let's say, not clear to rest of the world at the moment, or at least many of us investors are wondering what it is. You have surely read about this, and lots of things in the news, but myself, I try to be very picky on what I read on this situation and how I interpret it, because there is, when we talk about doing business in China, doing business in any country around the world, the culture is different, and sometimes when you have, for example, different languages talking to each other, there's a risk of miscommunication. So yeah, it is worth a while to pay attention what China says, but more what China does. And let's just hope that China is on the right side of history, condemning Russia's actions, what they are doing in Ukraine. Okay, that was a little bit of a sidetrack here. Still, some political risk, which obviously relates to not Alibaba only, but all Chinese stocks. Let's not hope this kind of risks materialize. But again, I want to say that this political risk of China and its stance on Ukraine and everything related to it is lots in the news at the moment, takes a lot of news coverage, but overall I see the risk being smaller than, for example, the Western media in relation this political risk in relation to Alibaba or any other Chinese stock. Probably just conclude this chapter saying that China is not Russia, not even near it, in many ways, and I think everybody should know that and keep that in mind. They are two completely different countries, two completely different economies in different stages of the cycle, and they are not the same country. That's just what I wanted to highlight here in the end. Now let's go to the catalysts. So, obvious catalyst after the news coverage has been bad on Chinese stocks. Obviously, if the news sentiment on Chinese stocks changes for the better, I think all Chinese stocks will bounce up like they did recently, but even more so in the future. Then relating to Alibaba itself, Alibaba's other businesses outside core e-commerce showing bigger than expected growth or profitability, like for example Alibaba Cloud, that could be a catalyst for Alibaba stock if that starts doing really well. Alibaba growing more rapidly outside China, so internationally than expected, another catalyst. Then just overall continually improving the ecosystem of Alibaba products, more value added to existing customers, making the platform even stickier than it is already now. And then finally, Alibaba is a huge company with lots of businesses. If they continue spawning new innovative businesses, which we don't even know yet, that is an obvious catalyst for the future stock price movement also. That's about it from Alibaba. Lots of stuff there. Next up, Sprott Physical Uranium Trust, or uranium as a commodity, 17% out of my portfolio at the moment. This position is currently up, plus 29%. In regards to valuation, this valuation obviously relates to basically only on what is the market price of uranium globally. Situation changes all the time when we talk about a commodity like uranium, but currently I would probably start selling my position if uranium price hits $80. Currently it sits somewhere around $59-$60, so $20 up, and I probably start selling the position. I most likely won't sell the whole position immediately, but I try to sell it bit by bit, thus not trying to time the market, but trying to be as close with some selling of the peak price as I can be. What is the peak price? Well, that might be much higher than $80. Difficult to say. If I would know that already, I would be rich in the future, which I don't know, but I can make my best guesses only. Nevertheless, I'm gonna sit still until the price hits $80, and when it does, then I will start probably slowly selling the position. Anyway, risk profile, I give 4, so not so much risk in my opinion. I have read about the situation. It's a commodity which has value. It's the substance that creates energy, makes our nuclear reactors go round and round. So rather low risk, I would say, actually, at least in my opinion. Main risks related to uranium. Nuclear accidents like the one in Fukushima 2011, that would cause bad news sentiment on uranium, obviously probably would make uranium prices go down as the panic starts and everybody wants to get rid of nuclear energy again. That is a risk. Then other risk, obviously, when we are talking about a commodity, is sudden overproduction of uranium. So if there would be magically a huge pile of uranium appearing in somewhere in the world, which would come to the market, that obviously would crash the price, as you understand, but this does not seem to be happening, at least according to everything I have been reading. Kind of the contrary of that is happening. There is not much uranium and the spot market is drying up, and there is no new production coming up, so the amount of available uranium is going rather down. And from here we can hop over to main catalysts for uranium. Well, as I just said, chronic underproduction continues and the spot market dries up. Sprott Physical Uranium Trust itself is buying the uranium from the spot market, so it's helping the spot market to dry up and thus inflate probably the price of uranium in the future. In other words, the asset it owns itself. What else might cause uranium prices to go up? Well, obviously, if some governments would make announcements of great number of new nuclear reactors being built, that could cause uranium prices to go up. And then again, we come to the sad things in life which might work as a catalyst for uranium. If there's a conflict in some uranium-rich country producing uranium, I'm going to take an example of Kazakhstan here because they are the world's largest producer of uranium. It was last week when a member of parliament, or whatever they have in Russia, but let's say member of parliament, proposed denazifying of Kazakhstan on top of Ukraine too, among other countries. Myself, at the moment, I don't think I believe anything that comes out of the mouths of Russian politicians at the moment. I don't believe what they're saying, but nevertheless, this is what a member of their parliament said last week. Obviously, if Russia would go and cause something up in Kazakhstan, that would probably also affect the uranium market, or it could, I don't know. I'm just speculating here. This would be the kind of catalyst that would probably make the uranium price go up globally. If Russia decides to nationalize Kazakhstan's uranium assets or something like this, nobody wants to see this happening. Obviously, I don't need my position to go up. I don't need uranium prices to go up this way. No, by no means. This is not a way I want to see uranium going up. Naturally, no. But I'm just stating it out loud to you guys here because that is something that could happen still. But still, I don't want to see any more conflicts in Europe, anywhere else for that matter. It's enough with the Ukraine at the moment. But needed to be still said here. Let's move to the next stock. Intel, 6% of my portfolio at the moment. Currently up plus 13%. I think it's undervalued by 15% at the moment. Risk profile I give 4, but Intel is important piece in my portfolio as I have lots of money in China, as you know. Intel is sort of a China hedge in a way, as China, Taiwan and South Korea are big semiconductor producers in the world. If anything bad, I don't mean a war, but any kind of bad things, natural disasters or war or anything would happen in that direction of the world, Intel's importance globally as a semiconductor producer would inevitably grow. Intel likely will have US legislators support to grow in the US due to national security reasons also, more in the future than what has been the case so far. And by this one I actually mean the COVID pandemic rather than any wars, because as we all know about the chip shortage globally, every nation became aware of that chips are pretty important for many industries, and it probably is a good idea to have some chip production in your own country if something bad like COVID happens in the world. Well, the main risks with Intel, Intel recently transformed from value stock to a growth stock, and if growth does not meet expectations, stock will decline for sure. Competition might also cause trouble with Intel, as they have many competitors globally. Main catalysts for the stock, well, the other side of the coin, it all depends on future growth. If the future growth exceeds the expectations, the stock will go up a lot. So Intel's success in the future is related to how it can grow. Probably not during the next, let's say, 1 to 5 years. They are investing, the growth will probably not show yet, but after the 5th year, then you need to see the results of the growth, and if that will disappoint, so will it disappoint the stock price of Intel. Another thing about the growth, which I calculate as a catalyst, is Intel achieving growth in the home market in US, but also in EU, because of national security reasons, like I just told you about the situation with the chip shortage and everything. COVID taught us if you have your chips produced in the other side of the world, that might not be a good thing if supply chains are disturbed. So Intel could be the one winning contracts and gaining a bigger share of US and EU market, I would think, or that's at least what I hope as an Intel investor here. Those being the catalysts, and now let's move to the next stock. Baidu, 4% of my portfolio, currently down minus 23%. So pretty much as much. The Alibaba and Baidu stocks are down pretty evenly in my portfolio. This only tells you how much two different companies, both coming from China, both down practically. I don't remember, well, I have not been buying these at the same time, but if you look at Baidu, Tencent, Alibaba, many of the Chinese stocks, they move to the same direction, only with the news sentiment around China, which might be actually a signal to you that some of these companies might be undervalued. If they are all crashing in a similar fashion, you should rationally think at that time, this is probably caused by some bad news sentiment around all Chinese stocks, and naturally their businesses are in different stages and not all of them are doing bad, obviously. So the market might be punishing some of these companies too harsh, and there might be value to be found. Something to think here actually. But nevertheless, valuation. Well, with Baidu's business, we are talking about a tech company. So traditionally valued, might be already somewhat overvalued at the moment, but huge uncertainty due to nature of their many innovative tech businesses, which are very difficult to evaluate, at least for me and probably for many other people too. Not the simplest of stocks. Baidu is the Google of China, as Baidu has been called. Risk profile, I give 8. Well, in regards to risks, it shares similar China risks as already discussed with Alibaba. Obviously, slowing growth with Baidu as a growth stock, growth tech stock, clearly a threat to the stock price. New business areas like artificial intelligence projects or autonomous driving and robo-taxis do not show any growth or profitability at all. That is at risk for the stock, and it might go down if, as the company has been investing in these areas a lot recently, and if there is someone else taking their market share in future, well, that will naturally hurt the price of Baidu. Well, what would be the catalyst? The same as with Alibaba, investor sentiment on China just changing for the better, and as we saw all China stocks coming down, we might see all China stocks going up. Market is not rational here. Definitely not. What else? Breakthrough innovations would lead to breakthrough new businesses, as we are talking about a tech-heavy business that Baidu is. If they come up with something really cool the world has never seen before, you know that the stock price will go up. So Baidu is a bet on wild high-tech innovations coming up from China. I will keep it in my portfolio for now, but probably for now I'm not buying any more Baidu, but not thinking of selling it either. I'm just gonna keep it there as kind of a China tech bet in my portfolio. But you never know. Let's see if some big movement happens with the company here in the near term. I'm not saying I will never buy more. Obviously I will if Baidu starts looking like a deal, but at the moment I'm keeping that exposure in my portfolio as I have, because it's just so difficult to value the company due to the nature of their businesses. Let's move to the last stock now. And finally, GEO Group, 4% out of my portfolio at the moment. It's currently down -9%. The valuation, by looking at the assets only GEO Group owns, I'm gonna make a claim here that it could be 50 to 70% undervalued at the moment, only looking at its assets. GEO Group might be a deep value cigar butt style company, as Benjamin Graham would say it. Risk profile, well, I give it a 6, might be even riskier than 6, but let's say 6 for now. Not giving it a higher grade in the risk factor because the assets, I believe, are worth something in the company, even though the company's business might be in trouble due to Biden's executive orders and United States of America moving away from private presence, or so that private presence would not exist anymore in the future. And this is why I did a different kind, because clearly if the business will be run down, you cannot do basically a valuation on its future earnings if there are no future earnings to be but you can do a valuation on its assets if it can sell those assets. So this one is interesting one, GEO Group. Main risks, when it comes to liquidation, if we think that GEO Group is just gonna liquidate all its assets or all its presence and everything that it owns, you mostly have only one buyer to large extent, which obviously will be the government of United States. It's not the best negotiation situation if you have only one buyer for your product. That's a terrible situation, which might be the reason why this stock will never go up and will not be a good investment if the government buys your assets, but government is not going to pay anything for your assets because they know you don't have anybody else to sell these assets to. Well, if we just speculate here, I guess you can turn presence into something else also. I don't know what, but you could find them another use on top of just being presence, which might give you some new buyer candidates. But if they are going to continue as presence, then clearly you have only one buyer, and that's the government. You understand the situation. Not a good thing if you have only one buyer for your product. So that's definitely a big risk for GEO Group stock. Then another risk might be rapid decline in need of incarcerating people, which would obviously means that less people go to prison than before, which obviously would be a great development. And I would like to see that happening in the United States of America, which has the highest incarceration percentage in the world. It would be a great thing if less people would be in the presence in the future than it has been until now. I'm happy to lose my money that way, definitely. But to be honest, I really don't believe that will happen, even though I would like it to happen. Then coming back to catalysts for the stock, well, let's go them through now. They have lots of debt, so if they can pay down the debt with the revenues they are getting at the moment from business, paying down the debt would be a catalyst. new contracts from the government. That would mean the reversal of Biden executive order to run down these private presence. Maybe there is a new president in the House, in the White House in the future, and they want to continue private presence operating. That would change the whole story for GEO Group naturally. But as said, that would clearly make GEO Group continue their business at least for some years. Stock price would go up. But then again, even if that doesn't happen, then the final catalyst I found was the one I was already talking to you about: government paying good price in liquidation for GEO assets if private persons are not allowed to continue anymore in the future. So if GEO Group somehow can negotiate good prices on their assets, which is kind of what I'm hoping for when I bought this stock, then the asset value will be higher for the company than expected, and the company's GEO Group stock price will go up for sure. GEO is now trading somewhere around $6 per share. I have to say, I would not be surprised even if everything goes well with the company and some catalysts do happen for the company, to see the stock price hit even $20. So from $6 to $20 in the near future, and I'm talking years here, from 1 to 5 years, let's say. And this would happen even without any short squeezes, as this company does have a big short position, short percentage of float at the moment, so people have been shorting GEO. If some kind of short squeeze happens, well, that's obviously like one in a 100 years type of event, as you saw with GameStop short squeeze. Probably not do your investing solely or only looking for short squeezes to happen. It's a nice bonus if it happens, but what I have been looking with GEO Group is the value of their assets. And as I said, the price of the share is $6 at the moment. I feel that if everything goes well, the price of the assets can be even close to $20, so that would be a huge upside for the company. Will it happen? I have no idea, I don't know, but I will say that it can happen, and that is the reason why I have been investing in this company. And this from $6 to almost $20 will be the bold prediction I'm gonna make here in this video. Right now here with the last stock in my portfolio. I'm not promising you that the stock price will go from $6 to $20. I'm only saying that if that would happen in the future, I would not be surprised. To conclude here, please remember these valuations were only the very short summaries of my investments. If you consider investing in any of these companies yourself, be sure to do your research work well before that. This was only a highlight video. Obviously, I have been researching these companies quite a bit myself, but if you are planning on investing in them, so will you need to do that as well. Once more, I'm not a certified financial advisor. I am not giving financial advice in any of my YouTube videos here. I am stating my own opinions, and that's about it. You are always responsible of your own investments, and you will always need to do your own research work no matter what. Nobody else is responsible besides you. Remember that always. And with those words, I'm gonna thank you for watching this video and hopefully see you in the next video. Bye bye.